Right, let's have a look at requirement A. We need to prepare the prior error note in the individual. Now, guys, don't miss this. In the individual financial statements of Techno for 20.19. 10 marks. Now, when you look at this is a recent SICA question in terms of 2020. Guys, I've personally marked this question, and it's not a difficult question, but you need to ensure that you focus and that you understand the information. Right, now, as always, you need to have a plan of action. Now, my first step, I will include a template. Now, remember, a template can be anything to assist you. This is for you, right? Therefore, on a new page, I've indicated that this is my question 2. Now, in terms of my template, I need to know that I need to include my heading, right? I've included the heading, Techno Limited, notes for the year ended 31 December 2019, prior period error. Then in terms of my prior period error, I need to include a note of what happened. I need to remember to include the effect on my profit and loss and the effect on my statement of financial position. Now, this is my template, guys. At this point of time, I can't remember what's included in the question, but this is my template. This is my reminders. I need to include a note, the effect on my P&L and the effect on my statement of financial position. Right, then my next step, when you look at the right side of your screen, is to include a timeline. Remember, a timeline is there for me to assist me. Therefore, on my next page, I've indicated that this is my workings. I'm able to remember, or if you can't, refer back to the scenario. Our at acquisition date is 1 April 20.14. They've purchased 35% shares. Now, our current year is 31 December 2019. Therefore, we are looking at this financial year. Okay? Then, next step, 3, I need to refer back to the given information. I need to work through the information and I need to ensure that I understand. Remember, this is an error. Therefore, we need to look at what is the journals that they have recognized and what should they have done. What is the correct journal? And then, guys, number 3, we need to identify this difference and identify the effect on our P&L, our FSP, and we need to remember our note. Now, please remember, this is a prior error, right? In the records of 2019. Now, if this is an error, always remember we need to restate. Therefore, we need to go back and fix 20.18's amounts. Right. Now, when you look at my timeline, I am currently in 2019. I'm busy with the 2019 figures. Therefore, I am not going to include this because we are still busy with 2019. You need to read the scenario very carefully. Therefore, in terms of our 2019 year end, we need to include a note that will relate to the restatement of the error because we are correcting some of our figures in terms of 20.19. I'm not going to include anything in terms of sorry guys, we are restating the error in terms of 20.18. I'm not going to correct anything in terms of 20.19 because we are still busy with the financials. It's not yet been finalized. Okay, but you need to read the information carefully. Therefore, when we look at our scenario, our 4th step will be to complete our calculations. We've identified the effect on our P&L. Transfer this to your template. Identify the effect on your SFP. Transfer this to your template. And remember your note to state that you need to restate. Right. Now, let's refer to the scenario and ensure that we understand the scenario. So we need to correct the error. Now, what is the error? The error they've indicated to us is item number 1. Therefore, immediately I will open this section, item 1, my computer equipment. They've indicated to me on 1 January 20.18, ICT sold and installed a mainframe computer, which it had manufactured to Techno for 15 million. This amount included installation of 14 million. On 2 January, it's available for use. Therefore, our associate can start with depreciation. ICT has correctly accounted for the sale in its separate accounting records and realized a gross profit of 25% on the transaction. which is market related. Techno processed the following journal on 1 January 2018. Right, as always, let's have a look at our journal entries in the separate records. Now, please, guys, I'm going to write this out. You do not have to include this. Please remember. Okay, in the separate records of our investor, which is ICT, our investor will debit bank, and this will be the 15 million, and credit sales, the 15 million, right? This is inventory, very important. This is inventory in the separate records of ICT, right? And then they will debit cost of sales, credit inventory with what? If we look at the information, they've indicated to us that 25% gross profit. Therefore, our selling price will represent 100%, and this will be the 15 million. Our gross profit will represent 25% of the 15 million, and therefore our cost of sales will represent 75%. Therefore, our cost of sales in terms of the 15 million will be an amount of 11,250,000. Okay? Therefore, in the records of Invest ICT, this will then be 11,250,000. 11,250,000. You with me on this one? Okay. And the separate records in terms of Techno. Techno debited the computer equipment, recognized an expense. But guys, this is the error. You see, this is our error in terms of Techno. This should have been recognized and capitalized to PPE. Okay. Now, don't get confused, guys. We are here looking at 1, the intra-group transaction. You with me on this? And then 2, when you look at the right side of your screen, the error in terms of the recognition in Techno's records, right? Now, this is our requirement A. Now, let's only look at the requirement A for now. Okay, focus. Let's only look at the requirement A for now. If we look at this, they indicate to us that they have recognized the installation costs and as an expense, but we say that this should be recognized as PPE. Therefore, when we look at what they have journaled, is they've journaled the 1 million to be an expense. You with me on this? Remember, this relates to 20.18. Okay. Therefore, for 20.18, what they should have done, the correct recognition, was to capitalize this 1 million to our PPE. You with me on this? Okay? And then to depreciate this 1 million over the 5 years. Therefore, we have the 1 million, divide this by 5, and this is 200,000. Okay? You with me on this one? 200,000. Therefore, in terms of our 2018 financials, our PPE should increase with 800,000. Now, if we want to correct this scenario, think about this. If we want to correct the scenario, first, let's have a look at what is the effect on our profit and loss. Our profit and loss in terms of the expenses, our expenses should now decrease with how much? With this 1 million minus the 800,000. Therefore, the expenses should decrease. It was included. Now we need to take it out. And this will be the 1 million minus the 200,000. And this will be 800,000. And this is the effect on our profit and loss at this point of time. Therefore, let's transfer this to our note. When you look at this, remember, we only include the 20.18 correction. I have included that this is a decrease in my other expenses. I need to reference this, and let's call this my calculation 1. On my workings, when you look at the right side, I'm going to include that this is my calculation 1, and I need to ensure that my marker will be able to identify all of this, right? I've highlighted this green. Okay. Now, guys, while I'm busy, I do note that in my note, I need to indicate that on 1 January 20.18, you need to write this out, please. Techno incorrectly expensed installation costs that should have been capitalized. Okay. We also note now immediately, we know that we need to, and the value, to the value of 1 million. Okay. And we also know that we need to state that it should be restated. I've included the restatement to save us a bit of recording time. Okay. So guys, we have now identified that in terms of our calculation 1, the effect on our expense. But when you now look at, and guys, look at 2018. Remember, for this year, we should have included our PPE. Therefore, our PPE should increase. And this is the effect on our statement of financial position, that our PPE should now increase with this 800,000. Okay, we need to correct this. Therefore, in our note, at the bottom, we need to increase our property, plant and equipment. Also calculation 1, and I have transferred my 800,000 and it agrees to my workings. When you look at the workings on the right side, calculation 1, 800,000, calculation 1. Right, now let's refer back to our scenario. When we look at the scenario, there is another error, okay? In terms of the tax, remember, they have indicated to us, look at the left side please, I'm including a green arrow. They've indicated to us the South African Revenue Service grants a wear and tear allowance on the mainframe cost and installation costs. And therefore, we are able to identify that SARS agrees that they had to capitalize the 15 million. You with me on this? But when we look at what they have done, they have claimed deductions. They've deducted this against their current tax calculation. Do you see? Therefore, the total of 15 million has an effect on the current tax for 20.18 because they've deducted the total 15 million, but this should have been capitalized. Okay, therefore when we look at our calculation, and let's call this then our calculation number 2, I want you to look at the left side of your screen for me please, calculation 2. So what have they done? In the current tax calculation, current tax, you remember we start with our profit before tax, we take out our accounting, we bring in our tax rules, right? Now, what they have done is they have deducted this 15 million. Therefore, do you agree with me in terms of our current tax? If they have deducted the 15 million, our tax payable will decrease because our profit in terms of our taxable profit is less. Okay, but if we now need to take this out, remember this is what they have done, the journal, and this is the right version. If we now need to take this out because this should be 0, there is no adding back of depreciation and wear and tear. Why not? Because when you look at the scenario, they have also recognized the wear and tear. Therefore, for accounting purpose, look at the left side, we have deducted our 3 million, and for tax purposes, therefore the net effect will be 0. Therefore, if we now need to correct this, our tax payable has decreased. And if we need to correct this, our tax payable should now increase. With how much? This 15 million times 28%. Now this is your tax payable portion only, guys. Right. And this will be 4.2 million. And let's transfer this to the face of our note. We have indicated here, guys, you still with me, that this will result in an increase in our tax payable. And this is my calculation 2. And this is an amount of 2.4 million. Sorry, no, 4.2. Now, but what about the 800,000 correction? If you look at the 800,000 correction on the right side of your screen, our expenses will decrease. If our expenses decrease, our taxable profit will increase. If our taxable profit will increase, our tax payable will increase. Therefore, we need to add the 800,000 times 28%. This will be 224,000, and our income tax will increase to the value of 4,424,000. Okay, but guys, look at this now, my signs. And this is important. Your signs, you need to ensure that your marker will be able to understand. So we have a decrease in our other expenses. Therefore, I have included this in brackets. But now I have an increase in my tax payable. Therefore, this should now be a positive. Okay, it is important when you mark your solution that if you have included the 800,000 as a positive, but you need to still indicate that there is a decrease, your sign should correlate with the description. And this is important. Your sign should correlate with the description, please. Okay, guys. Then the increase in your tax payable should then be the negative, because this should net off. This is also right. But then your signs should correlate with your description. Therefore, in terms of our profit and loss, we will have a net effect, which will be a decrease in our profit and loss after tax to the value of 3624,000. Again, guys, please, your signs and your description should correlate. Right, now we need to look at the effect on our statement of financial position. Okay, so guys, when you look at the effect on our profit and loss, remember we have identified that there is an increase in our tax payable to the value of 4.2 million. Therefore, in our statement of financial position, we have to include, guys, this should be income tax, not tax payable. This increase in our income tax expense. Okay. Now, this 4.2 million relates to an increase in our tax payable, because they now have to pay this. Think about your current tax calculation. Our tax payable, and this is our 4.2 million. This is a liability, therefore I prefer to include this as my brackets, right? But, okay guys, now, when you think about our deferred tax, what is the effect on our deferred tax? If we include our deferred tax calculation, let's say that this is calculation number 3. Think about this. We have our carrying amount, our tax base, our temporary difference, and our deferred tax. Now, for accounting purpose, what they have done, the journal that they have recognized is 14 million, right? Minus the wear and tear on the, minus the depreciation on the 14 million. Okay. And for tax purposes, they have recognized the 15 million and they've recognized 3 million wear and tear. Remember when we refer to the scenario, the orange, the 3 million, right? Okay. But what they should have done, the correct method was to include the 15 million, recognize the 3 million in terms of the depreciation, include the 15 million, recognize the 3 million, therefore there will be 0 effect. Now for us to correct this transaction, what do we need to identify here? If we have our 14 million, divide this by 5, we will have a carrying amount of 11.2 million. You with me? Our tax base is 14 million. Therefore, we have a temporary difference of 800,000. Now, when we look at this, the carrying amount of our tax base is less. Sorry, the carrying amount of our asset is less than our tax base. Therefore, we know that this is a deferred tax asset, right? Therefore, we have a deferred tax asset of 224,000. Okay. Now, if we need to take this out, this will be a decrease in our deferred tax asset to the value of 224,000. Okay. Therefore, on the face of our note, we need to include that this will be a decrease. Again, guys, your description needs to match your signs in our deferred tax asset. This is our calculation number 3, and this is 224000. This is a decrease, and we will have a net effect on our retained earnings, which will be, if we look at this, guys, important, we have an increase in our assets, an increase in a liability which exceeds the asset, and our asset will decrease the deferred tax. Therefore, this will be a decrease in our retained earnings. And this is the 3624000. Right. Now you're able to identify that the movement in our profit and loss agrees with the movement in our retained earnings. Okay. But when we now look at our note, we still have to include that there is another error. Remember, the other error was that they recognized a total tax deduction in terms of the cost and installation. And this is not allowed. They had to capitalize it. Therefore, I have included this sentence here, guys. When you look at the left side, a tax deduction was also claimed incorrectly for the cost and installation costs of this computer equipment in 20.18 current tax calculation. Right, guys, this is your note. My recommendation, always include your reminders that you need to state a description, that you need to look at the effect of your profit and loss, and that you need to look at the effect of your statement of financial position. And when you look at the issue, identify what they have done, the journal entry, versus what they should have recognized.